जी स्टूडेंट्स, उम्मीद है आप ठीक होंगे। आज हम एम.कॉम पार्ट 1 के लिए ऑनलाइन फर्स्ट लेक्चर जो है वो शुरू कर रहे हैं, जिसमें जो आपकी फाइनेंशियल अकाउंटिंग की बुक है उसका कुछ हिस्सा मैं ऑलरेडी क्लास में डिस्कस कर चुका हूँ। जो स्टूडेंट्स क्लास में पार्टिसिपेट नहीं कर पाए उनके लिए मैं थोड़ा सा अपने प्रीवियस टॉपिक्स को रिपीट कर देता हूँ। एक्चुअली बुक का जो टाइटल है जो हमारे डिस्कशन में आएगा उसका टॉपिक है फाइनेंशियल स्टेटमेंट्स एंड बिजनेस डिसीजंस। दिस इज़ द वेरी फर्स्ट टॉपिक of your discussion and to review. Now from this chapter, objectives of financial accounting. Normally we feel that what is the objective or aim of this particular course of study. In this particular course of study, inshallah, we will see how to prepare the financial statements and what are the uses of these financial statements. Financial statements are the primary means of communicating financial information to parties outside the business organization, not only to the outsiders but also to the insiders like management, employees of the organization, and most preferably the owners of the organization. They are very much keen to know the business information, not at the end of the year but time to time during the year. You can say quarterly, half yearly. They are conscious about the performance of the business, so that's why they are interested. So before detail of these financial statements, which are preferably 4 in numbers, have a look to the background of business owners, called investors or stockholders, look for two sources of possible gain. When business start, these investors invest in business organizations take funds from these people for further use, and with the help of these funds they acquire assets. On the other side, normally business borrow from financial institutions, borrow from other businesses, borrow from general public. So when business borrow from general public, these investors are not owners of the business, these are the creditors of the business. When you look at the definition of creditors lend money to a company for a specific length of time and gain by charging interest on the money loaned. Here in front of your screen, you look at the financial institution. Financial institution lend money to Dana's Diner. It's just like a restaurant which is owned by Dana. So she herself invest in business, also getting loan from the bank. So you can say there are two sources of funds for the business. One is owner itself, herself, and secondly the financial institutions. Businesses on the basis of nature are of three types, which is normally we see in environment: manufacturing businesses, trading businesses, and services oriented businesses. All these businesses provide tangible or intangible things to the people for use. So their product may be in a physical shape, their product may be in a non-physical shape. So on the other side, the buyers, the users and customers get advantage of their products. Now with the passage of time, all these businesses need a system to record their financial aspects. That system which help them to record their financial aspects. That system is called accounting. Lots of definitions are available about accounting, but to me the most preferable important is accounting is a language of business. Now you can see what normally accountants or bookkeepers do while observing, knowing the business aspects of the organization. They collects and processes financial information about an organization. After collection and process, they report such information to the decision makers. The decision makers, internal decision makers and external decision makers. Internal decision makers are business managers and external decision makers are investors. Now here is a shield for you to know the accounting system. You can say division of accounting into two broad fields. First one is called financial accounting, second one is called managerial accounting, and third one, which is not in this particular shield, that is tax accounting. Financial accounting provides the financial information especially to the organizational members like managers. Through financial accounting, we develop financial statements not only for the insiders but also for the outsiders. On the other side, managerial accounting system. This managerial accounting system provides information pertinent to the management to satisfy their needs. In managerial accounting system provides accounting information, financial information according to the desire of management, which will definitely help them to make future decisions. So here comes four basic financial statements. First one is income statement, second one is balance sheet, third one is cash flow statement, fourth one is statement of retained earnings. Now when these statements are prepared, it's a very important question. Most companies prepare financial statements at the end of the year, or sometime prepare at the end of the quarter, or sometime prepare at the end of the 6 month. So it all depends on the mood requirement of the management when they are expecting such financial statements from their accounts department. While preparing the financial statements, the important things which we need to observe, how to develop these sheets. We normally follow a pattern which is a standard pattern. In Pakistan, we follow these patterns according to the light of Companies Act 2017. Also, we get assistance from the General Accepted Accounting Principles, which is known as GAAP. Now, it is clear from the sheet. Very top on the sheet there is a name of the organization, which is called name of the entity. Next to that there is a title of the statement. Next to the title of the statement there is a specific date on which you are going to develop that sheet. Very next, which is fourth point, the measuring unit. Either you are preparing your financial sheet in terms of rupees or in terms of dollar. So four top headings for these financial statements. When you look at the balance sheet, already I have explained balance sheet in class when you were physically taking lecture. Balance sheet actually is a snapshot of firm's financial position on that particular date. If you look at the balance sheet, you will see the two sides. The first side is source side and second side is resource side. Now the resource side comprises of assets, the current assets and the fixed assets. On the other side, the source side, which also comprises of liabilities and stockholder equity, or you can say shareholders equity. So dear students, a balance sheet gives you a bird's eye view of organization's assets, organization's current assets as well as fixed assets. Then you would be able to know the liabilities, current liabilities as well as fixed liabilities, and the portion of contribution from the owners, which is called stockholders equity. For your more information, assets classified into current assets and fixed assets. Those which are readily, easily convertible into cash, those assets are current assets. Examples are cash, inventory, bills receivables, note receivables. Fixed assets are those assets which are permanent in nature and takes time to convert into cash. So that's why these are called fixed and permanent assets. Examples are building, plant, machinery. These are the common examples from fixed and permanent assets. Actually, these are those assets which are used by the organization for longer tenure, for long-term purposes. Now we move to the right side of the balance sheet, which is liabilities and owners equity. So this is already I have mentioned, it is a source side. This side will set the volume of the organization in terms of dollar value. Those obligations which are likely to meet in a shorter time of span, you may say 1 year, those obligations are current obligations or short-term obligations or liabilities, like loan from bank for 3 months, 6 months, up to 1 year, or you can say bank overdraft, loan from your suppliers, loan against bills, etc. On the other side, there are long-term liabilities, means business borrow from banks and financial institutions or loan providing agencies for more than 5 years up to 10 years. Those are long-term liabilities. And next to the balance sheet, next third portion of your right hand side, which is owner's equity. This is called claim of the owners on the business, or you can say this is the investment of owners in business, which is called stockholders equity or owners equity. So this is a capital which is redeemable capital after the expiry of the business. So that's why you can say it is irredeemable capital, means okay, during the life of the company, during the life of the business, you cannot take it back from the business. Now to express that balance sheet through equation, we draw equation in this fashion, in this manner. Assets on the left side and liabilities and stockholders equity on the right hand side. Assets are known economic resources and liabilities and stockholders equity are sources of financing. Liabilities are sources from creditors and equity from the stockholders. So students, more detail about the balance sheet: asset side, which is called resource side, or source side, which is called liabilities and capital side. Now you can see assets are listed by their ease of conversion into cash, which means those which are easily convertible into cash, and those are which are not easily convertible into cash. So that's why on the basis of priority you can see cash gets the top priority among the current assets. Next to the cash there is account receivables. After the account receivables there are inventories, which is called stock. In common language we call it is stock, which is available to the business. Next to these current assets or readily convertible assets, there is a list of fixed assets, which you can say not easily convertible into cash: plant, equipment, land. Here we have a very short one-liner definitions of these concepts, of these terms. Cash: amount of cash in the company's bank account or in the hands of company's accountants. Account receivables means amounts owned by customers from prior sales. Inventories means partial and completed but unsold product or goods. Plant and equipment, factories and production machinery. Land means property on which factories are located. So it's a very simple, or you can say concise explanation according to your mood and requirement. Now here you will look to the liabilities and stockholders equity side, which is source side. In my previous lecture I have mentioned so many times, source generate resource and resources generate source, if you remember my previous lectures. From the liabilities, first in blue shaded area you will see the current liabilities. Very first current liability, which is in blue shaded lines, which is accounts payable, amounts owed to suppliers for prior purchases. Next to the accounts payable, notes payable, amounts owed on written debt contracts. After these liabilities we have permanent or long-term liabilities, and next to those permanent and long-term liabilities we have investment, which is in the shape of capital. Visible in front of your screens, contributed capital, and next to those contributed capital, here we have a new concept for you people, that is retained earning. It is that portion of profit which is kept by the business for their contingencies, for their longer need. So it also becomes the part of capital, which is in accounting term called retained earning or reserve as well as. So the equal of total liabilities and stockholders equity should be equal to the total of all assets, which is now in your screen $27,261. It is the total of your assets equals to the total of liabilities and capital, which is $27,261. Now more detail about the capital and retained earning, though I have explained in my previous shield. Capital which is invested or injected by the owner in business is called contributed capital, also known as stockholders equity. Now next to that capital there is a retained earning. This is that portion of profit which is kept by the management in business for the business needs, for the contingencies, for the unforeseen reasons. This is that portion of profit which is left in the hands of management after the distribution of profit. So this is called retained earning. Now here is another shield which will also provide you more detail about the assets, liabilities and stockholders equity. Now the red marked arrows will support my previous words that all the assets, total dollar value of assets should be equal to the total dollar value of liabilities and stockholder. So I hope you have understood in a good manner. If you have any query, you may send me feedback. I would be inshallah ready all time to provide you assistance regarding these problems. So see you inshallah in next class. Till then, Allah Hafiz.